4 things to avoid when you're a first-time home buyer and getting your mortgage for the house that you want.
That's so exciting. But before we get into it, let's hit it. Hi guys, welcome back to our channel. This is Alan Victoria. This is the first time to our channel and you want to know everything about Greenville, North Carolina, please hit that subscribe button, get notified, and give us a thumbs up for all of our new videos.
Honestly, we get a lot of calls from people that they wanted to move to Greenville, North Carolina, and they are excited. We are excited that we can help them and get the call and help them to relocate.
Or just first-time home buyers. We love them too. So we absolutely love helping people, so give us a call. Now let's hit it, right?
Let's hit the first item. Therefore, we wanted to talk about 4 specific items that you should avoid.
Right, so number 1, we need to stop shopping around. I know that sounds like a crazy thing, but we're going to get into what that means. What does that mean exactly when we're saying we're not going to shop?
Not shopping around is very important because
I love
first
shopping.
off, yeah, of course you love shopping. And then basically most of the people, they put all of their time and interest to just browse and find the house that they want.
I mean, I'm not gonna lie, I like to look at random houses too. That's why I became a realtor. So I mean, I love it. But however, when you're looking to actually buy one of these homes and you want an action plan, there's a little bit more to it. Now, step 1, you should actually be doing what? What should I be doing?
Basically,
besides just looking.
Besides of the looking like just in the house, also you should look at the different mortgage broker or the banks that they're offering.
Oh no, but I hate banks. At least that's what I used to say. It's not true now, but you really should talk to your bankers, your brokers, and talk to more than one, because the truth is, if you lock into one, it's a 45-day window to where they know you're browsing, and you should talk to as many of them as you can in that time period. That way it only counts as one negative on your credit report. So that's just one thing to talk around. And why do I want to start shopping for mortgages en masse? Why is the point?
Actually, the advantage is basically it's like a shopping. No, if you wanted to buy a sofa, you wanted to buy a car, you go to the different store and see what the deals is.
Mm-hmm.
The same thing is with the bank and mortgage broker.
Okay.
They offer different interest rate, different loan terms, and how you can basically
pay. Why does the interest matter to me? Why does that really matter when I just want to go shopping?
Exactly, the interest rate. If you, for example, looking at the $250,000 house, for average,
right.
no?
Let's do math.
Therefore, let's do like instead of getting 3%, you get 3.2%, no?
Or 4. Let's go 4.
Or 0.4%, no? Therefore, if you look at the 30 years of the loan term and you multiply this number that is around $100 to $110, the difference, you are looking at $35,000 extra pay over the terms of the letter.
Okay, so getting a good interest rate is super important to me then. That way I can pay less to a bank and more into my house. Okay.
Exactly.
Okay,
therefore,
so
you long run saving a lot of money without knowing it.
Then I can get that pool. Yay! Okay, so number 2, second thing we're talking about is we should be looking at or you shouldn't be always going shopping all the time, and make sure you start paying attention to that credit report and your credit number. We are not numbers. I hate that banks call us by a number, but the truth is our FICO score does matter. Why?
And then we covered this one in this video that you can watch.
Oh, that's true.
But
you mean which video? The 4 video? The types? No.
Yeah, the videos that we talk about. How to take care of your credit score, how to fix your credit.
We did that one.
And then the problem is, if you don't look at, before you actually start doing application, you should know, because we had so many people, they say, oh, I think I can apply, or I think I'm okay, but they really don't know anything about the credit score or FICO score that we talk about. Therefore, the first smart thing is that my wife said also in the video, there's a button now in your bank account on the corner in many banks that are offering it, because the government actually enforced it, that you can definitely know your credit score. Before it was fancy, you should have pay a lot of money monthly to know their credit score. And honestly, I didn't want to know my credit score all the time. But when you are doing the shopping...
And let's also talk about it, because we've had some specific clients who really, they think their credit is bad, but the truth is it's not that bad. They have one or two issues that can actually be cleared up in a couple days as long as they take action. So there is such a thing as fast fix, and that would be like that particular one was a really fast fix because it's just was something they were avoiding, but it didn't have to avoid. And a monthly payment plan is actually sometimes better than a long time, like just pay it all at once and get rid of it, because that can actually hurt your buying a house instead of just having a payment plan.
And you should also look at this video that we're putting, that this video specifically talks about 4 different types of the mortgage loan. Why I'm saying that? Because your credit, your FICO score also matters if you are basically looking at the different types of the loan, no?
And it also matters when it comes to our next topic, which is down payment with not enough down payment. There are some programs out there that require little to no down payment, and it might even cover closing costs, where that's specifically USDA that I'm talking about, but VA also does it. If you don't know what those are, we have a video on that. Also, FHA requires 3.5% down payment of whatever the purchase price of the house is, and closing costs might or might not be included, so you should balance, at least in North Carolina, for $5,000 to $6,000 there. And then you have your conventional, and a lot of people think conventional is 20%. That's not true, guys. Not if you're buying your primary house. Your first house, you can come down with as little as 3% for your first house. So don't freak out that conventional might be the best for you because your credit is good. And why would you worry about it and just go with the conventional 30-year term that's been around forever? Those are the ones run by the banks. Those are good.
Therefore, we offered the solution because we talk about in the video and this video that we talk. But the bottom point is the bank wanted to secure that you paid them back as you promised. And that's why for them, paying more down payment is kind of you securing them. You make your process of your loan faster, and the bank trusts you to give you that. And also on the top of that, it could be a factor that actually knocked down your interest rate.
And let's just be honest before we move on in today's market, and this is just for people who already own a house perhaps, and let's just say your house has worth a lot more than it is. Maybe now is a great time to cash out, take that money and go get a different house, which is now means you're coming in with a significant down payment. So it is an option many people are doing right at this moment. So I wanted to throw that out there because it is a down payment issue. Now, if you suddenly do have a large down payment, it means that your mortgage rates are going to be lower. And what is the last thing we're going to talk about today? Our debt to income ratio. What is that again? Because I don't like
debt to income ratio, or DTR, is a fancy abbreviation. We don't want it to go there. But this is one of the items that many actually buyers avoid. And the banks look at all of your credit history, the length of your credit that is open, and also how much debt you have.
Yes, true.
Therefore, they definitely know that if they wanted to give you money, first they wanted to show how much debt you have, because if they want to secure the money, the mortgage, they wanted to say that this person is going to give me back the money that I lended him.
Right, so pretty much buyers don't think about their debt when they put in these applications, but debt to income ratio can matter, and especially when we're talking about student loans, which I think we did in a different video as well, but don't be scared about those because it is what it is. Now, anyway, those are our 4 major tips to stop shopping, start looking at mortgages, shop for your credit, get your credit report, find out your down payment and your debt to income ratio.
And also I wanted to add that debt to income ratio is better to be less than 40%. Therefore, guys, when you wanted to shop for a home, don't go get fancy cars or sofa.
But I want that new car and all that everything. Why not?
Therefore, this is what basically takes up your debt to income ratio over that 40% of the threshold. And the bank is not going to lend you the money because you overpass the threshold.
But I
Therefore,
get that nice
you
car
should
later,
make
right?
sure when you submit your application and also you get funded at least in that period, you are not looking at the purchasing a big item.
Wait, so I can purchase a house after I find the house that I want? Now I can buy a big house? Is that true? I can go buy me a fancy car?
Yes.
No, you can't buy a fancy car during the closing until after closing. Once you have the keys in your hand, then you go buy the fancy car that you were talking
Exactly.
about. Okay, just want to throw that out there. He wasn't understanding. It's cool. Guys, there are countless small little communities in the Greenville, North Carolina, and dozens of suburbs. We love helping people get into whichever one. Maybe you want to be in the city, maybe you want to be in the suburbs. But you need to reach out to us if this is true. We want to know your lifestyle and pretty much what we can do to help you find that move or go from one house to another. We love it. Shoot us an email, text, call, smoke signals. I love those.
And we
signals.
got your back. And make sure that if you found this information valuable, you subscribe in our channel and gives us a thumbs up.
Bye.
Thank you guys and have a wonderful rest of your day.